Are banks dying? The rise of stablecoins. Explained. What if I told you the traditional banking system, the one that's been around for centuries, is slowly dying? Not with a crash, but with a quiet digital revolution happening right under our noses. Every time you swipe your card, make a transfer, or check your balance, you're relying on a centuries-old structure, banks. But in 2025, that structure is being challenged like never before by something called stablecoins. They're fast, borderless, and built on blockchain technology, and some experts believe they could one day replace traditional banks altogether. So today we're diving deep into this question. Are banks really dying, or are stablecoins just another crypto buzzword destined to fade? Stick with me till the end, because by the time you're done watching, you'll understand exactly how stablecoins are reshaping money, power, and the future of finance itself, the cracks in the banking system. Let's start with a reality check. The traditional banking model built on deposits, lending, and trust has worked for centuries. But in today's world, it's slow, expensive, and often exclusionary. Think about it. International transfers take days. Bank fees eat into savings, and millions of people worldwide still don't even have access to a bank account. At the same time, banks are struggling to keep up with digital innovation. Fintech apps like PayPal, Revolut, and Cash App already cut out the middlemen. But stablecoins, they're going one step further, cutting out the entire system. What exactly are stablecoins? Here's the magic behind it. A stablecoin is a type of cryptocurrency designed to keep a stable value, usually pegged to a traditional asset like the US dollar. In simple terms, 1 USDT tether, approximately $1 USD, 1 USDC, USD coin, approximately $1 USD, 1 DAI, decentralized stablecoin, approximately $1 USD. Unlike Bitcoin or Ethereum, stablecoins aren't meant to fluctuate wildly. Their job isn't to make you rich overnight, it's to make digital money reliable. And that reliability is exactly why stablecoins are becoming the backbone of the new financial system. Think of them as the bridge between crypto and traditional finance, offering the speed of blockchain with the stability of fiat. Why stablecoins are taking over. Here's where it gets interesting. Stablecoins solve the problems that banks haven't been able to fix for decades. Instant transactions. You can send money across the world in seconds, 24/7. No bank hours, no waiting until Monday morning. Low fees. Forget $35 wire transfers or 3% credit card charges. Stablecoin transfers cost pennies, sometimes fractions of a cent. Global accessibility. Anyone with a smartphone and internet connection can store, send, or earn. Using stablecoins, no paperwork, no approval, no bias. Transparency. Every stablecoin transaction is recorded on a public blockchain. That means less fraud, less manipulation, and more accountability. Now imagine this at scale, millions of users moving money without banks. That's not science fiction, it's happening right now. Why banks are nervous. Here's the thing, banks aren't dying yet, but they're definitely sweating, because stablecoins don't just challenge their technology, they challenge their entire business model. Banks make money by holding your deposits, lending them out, and charging fees. But with stablecoins, your money can sit in a digital wallet, earning yield in DeFi protocols, or even earning interest on blockchain savings platforms. That means you, not the bank, get to be in control of your money's growth. And for the first time, banks aren't the gatekeepers of financial opportunity. That's why major institutions from JP Morgan to PayPal are launching their own stablecoins. They're trying to adapt before they become obsolete. The battle between decentralization and regulation. But of course, it's not that simple. Governments and regulators are stepping in hard. Why? Because if stablecoins replace banks, that means less control for central banks and policymakers. When you can move billions globally without touching the traditional system, governments can't easily monitor money flow, tax evasion, or illicit finance. That's why we're seeing the rise of Central Bank Digital Currencies, CBDCs, government-backed stablecoins. It's their way of saying, if you can't beat them, join them, but under our rules. The irony? The very system stablecoins tried to escape might end up absorbing them. Real-world adoption. Stablecoins are already here. Stablecoins aren't just for crypto geeks anymore. Freelancers in countries like Nigeria, Argentina, and the Philippines are already using USTD and USDC to get paid, avoiding currency collapse and bank delays. Big corporations like Visa, MasterCard, and Stripe are integrating stablecoin payments into their platforms. And even traditional investors are using stablecoins as a safe haven parking funds between trades or during volatile markets. This isn't the future of finance. This is the present, happening faster than most people realize. The risks you should know. Now, before you sell your savings account and go all in on stablecoins, let's talk risk. Not all stablecoins are created equal. Some, like Tether, USDT, have faced criticism for lacking transparency transparency in their reserves. Others, like Terra, USD, UST, collapsed entirely in 2022, wiping out billions overnight. So always check what backs your stablecoin. Is it backed by real dollars, treasury bills, or just algorithms and promises? And remember, decentralized doesn't mean risk-free. Smart contract bugs, regulations crackdowns, or exchange hacks can still wipe out value in seconds. That's why the key isn't blind trust, it's informed participation. The future, will banks survive? So, are banks dying? Not today, but they're evolving under pressure. The next decade won't be banks versus stablecoins. It'll be banks and stablecoins, side by side. Traditional institutions will use blockchain rails. Stablecoin companies will get licenses and work with regulators. And everyday users like you and me will finally have a choice in how we store, move, and grow our money. Think of it as a financial revolution, not the end of banking, but the beginning of smarter money. The question isn't, are banks dying? The question is, are you ready for a world where money doesn't live in banks at all? Because the next generation of wealth won't be built with paper and passbooks. It'll be built on code, transparency, and decentralization. If you want to stay ahead of that curve, hit that subscribe button, drop a like, and share this video with someone who still thinks their money is safe in the bank vault.